Hello, everyone. This is NPC's Economics. The China Evergrande Group, or simply Evergrande, is the second largest Chinese property developer in China by sales. It filed for bankruptcy in New York on August 17, 2023. Less than half a year later, a Hong Kong court ordered their liquidation on January 29, 2024. I guess, Happy Chinese New Year to everyone except for Evergrande. Well, actually, Evergrande's fall from grace might just be one of the first dominoes to fall. Remember this one? That's right. Country Garden announced in October 2023 that it was unable to fulfill its offshore debt obligations. But both Evergrande and Country Garden represent just the tip of the iceberg. Chinese policymakers are scrambling to stimulate the economy. Real estates make up a much higher share of the Chinese economy than the US economy. This means deleveraging and lower asset prices create much more pain to the Chinese economy. But deleveraging and lower asset prices make households and corporations reluctant to take in new credit. Instead, they choose to pay down their debt. To them, stabilizing is more important than taking new risks. But by not taking on new credit, this leads to more deleveraging and even lower asset prices, which leads to lower economic activity. At this point, the country's balance sheet is shrinking, and lower interest rates would not avert this situation. The shrinking balance sheet is called the balance sheet recession, and why China's economy may be in deep trouble. Balance sheet recession is a term coined by economist Richard Koo. It is an economic recession caused by high levels of indebtedness or the bursting of a real estate or financial asset price bubble. Why is this a big problem in China? Well, China's real estate market is vastly different compared to the Western world. China's stock market is more a vehicle for transfer of wealth to party elites than a path to invest in legitimate Chinese companies. The CCP can unilaterally nationalize a company, which means investors can lose their money just because. Culturally, a man of marriage age is a more attractive partner if he owns a property. Corruption, strict capital controls, and cultural factors means that as an asset class, real estate has been the tried and true investment vehicle for many. But we knew what happened during the pandemic. China's strict lockdown policy resulted in a reopening that did not boom as people would have hoped. After Winnie's clampdown, house prices started to drop, hence hitting the capital position of highly leveraged Chinese players. Continued weakness in the housing market led developers to a rush to stay solvent. It should be noted that Evergrande's financial troubles did not emerge overnight. Reports of China's looming property crisis surfaced as early as 2 years ago. In an attempt to stay solvent, private sector agents pay back loans and mortgages as fast as they can, which is essentially deleveraging in motion. In other words, China's balance sheet recession is unfolding right now. Recent examples of balance sheet recessions include the United States' Great Recession in the late 2000s and Japan's lost decade in the 1990s. In the United States, household and nonprofit organization debt rose from 68% of GDP in the first quarter of 2000 to 98% in the first quarter of 2008, the onset of the Great Recession. As the value of homes fell and the mortgage debt remained fixed, equity fell. The increase in leverage caused consumers to shift from spending to paying down debt. The US government was driven into huge deficit spending, and the US entered into an era of zero interest rate policy, which comes with its own cocktail of headaches. But that's for another video. Responses to recessions typically include fiscal stimulus through higher government deficits and monetary stimulus such as lower interest rates and monetary creation. For Japan, its central bank lowered interest rates, but this strategy was not effective. As the private sector paid down its debt, there was limited demand for borrowing funds even at zero interest rates. This demand remained negative until 2005. So what can China do? China is facing its unique economic headwinds. Previously, it could prop up its GDP by building growth cities and infrastructure that lead to nowhere, even if these projects made no sense. To prop up its GDP, its components, that is, consumption, investments, government spending, and net exports, need to grow. But as the current housing crisis shows us, this strategy is no longer viable. The CCP could try deficit spending through targeted fiscal stimulus via capital injection, but it is not actually seriously considering it so far. Increasing exports doesn't seem doable either, as the United States and other countries are actively trying to decouple themselves from China, and that leaves consumption, but as it stands, it is currently heading the wrong way as well. And that goes back to real estate. The Chinese dream, which I mentioned in a previous video, goes like this: save diligently, family members pool money together, buy a home, and rinse and repeat. In China, most of these homes are sold before construction is even finished. Buyers would pay developers for a home that would be constructed, which allows developers to immediately take these down payments and start building more. Rinse and repeat. All it takes is some buyers to stop making payments, and the whole house of cards came crashing down. Once real estate is no longer the tried and true strategy to build and preserve wealth, what do you think Chinese consumers will do? They are scared. They are worried of being wiped out. So they go into monk mode, pay down debt, stop investing, and cut back on spending. And that is the balance sheet recession doom loop. Less consumption means firms will try to lower prices to lure consumers to spend, aka deflation. But that leads to lower profits, which leads to layoffs. And layoffs lead to even less consumer confidence. We already see the manifestation, whether it be high youth unemployment, the lying flat and letting it rot movements, and falling fertility rates. And without people of reproductive age creating more future workers in their wage cages, lower economic growth seems inevitable. China's population started to shrink in 2022 and is expected to fall by another 100 million people by 2050. China may grow old before it grows rich, and there is very little its government can do. So, what do you think? Let me know your thoughts in the comments, and I'll see you next time. Bye!